So stocks suffered a pullback week last week. We should not be surprised about that at all. I've been talking about August and this yellowness that's all over the calendar. There is still strength in numbers, and not every stock's going to go down when we see the market becoming uncertain. There are stocks that move higher, and right now that rotation still seems to be in tech, in AI, and mega cap. All right, so that's the first thing that the big takeaway I get as I come into Monday morning. Bond market. So the bond market gapped up last week, and all eyes are on Walsh's keynote comments, which are coming out this Friday. So we've seen the bond market now doing some buybacks on long-term yields, and that really fueled the fire for the third piece of news that really set the tone for last week, and that is assets. Not just mega caps, but metals, the metals markets, and cryptos. Big jumps last week for both hard and digital assets. I want to get into all of that. But here's the big one, all right? The big move of the week has to be Bitcoin. So when you take a look at this chart of Bitcoin, and this is the iShares Bitcoin ETF. So I'm looking at this, and there are 4 reasons immediately why we see Bitcoin and IBIT going from the lows last week near 35 to topping 45 today. All right. First of all, we're getting more and more clarity on the Clarity Act, and that is bringing optimism back into this space. The second thing that happened was the Treasury expanding their buybacks on long-term yields, and that really got the party started last week. And then once we got into the high 30s and got above 40 on the IBIT ETF, that actually put us well into the 70s in Bitcoin. That 72 to 75,000 area, a lot of short sellers got squeezed. Now, when short selling happens, what happens when short sellers get squeezed? They are forced to buy their positions back to close, and that creates a buy in the market, which even fuels more fire to the upside. And then finally, because of what's been happening in number 1 and number 2, ETF inflows are back. That means that we're seeing more buying than selling on these ETFs like IBIT, ARKB, and there are probably a dozen others that saw more inflows. They haven't seen inflows now, probably significant ones. We haven't seen significant inflows. You got to go back to before Memorial Day to see the last time we saw some real inflows happening in this area. So this is a big deal, folks. All right, it's a big deal for assets. You take a look at the gold market. It too has made some major comebacks, but this is the one that takes the cake for the week, which is Bitcoin. All right, so where do we go from here? Coming into the day, this is what the money calendar is telling me right now when I look at ETFs. And ETFs, again, are really going to be comprised of those assets, those exchange-traded funds, which represent kind of the haystack, all right? Where if I look at stocks as the needles in the haystack, I'm looking at ETFs as the haystack themselves. So we start off with about 67% bullishness. We end the week on 57% bullishness. Again, no clear sign that the majority of stocks want to move higher just yet, and I believe you're going to see that for the foreseeable future. The chart on XME looks like this, right? So we've seen since the beginning of 2026, we started out on the low end of the scale, immediately moved to highs for the year, back down, back up very close to those yearly highs back in June, and then back down to new yearly lows. The yearly low right now for XME is around 95. But look what's happened just in the month of August. We've started to move higher back up from the mid-90s to 120. And right now just trading underneath 120. Now, if the seasonal trend were to prove out correctly, you can see here that I've got the seasonal trend in green pushing us out to around mid-November. If we just follow the dotted lines on the resistance, that still puts us at around that 6 percentage points and that's up into the high 120s, about 128.